Mm. Okay. So we are doing recording again for the lecture. And in the second part of the lecture, we are talking about auditing revenue, receivables, and cash receipts. Cash receipts here. So I guess for any part of the audit, so here we have moved on to the specific area of the audit engagement. If we are looking at, I think in lecture 5 or lecture 6, actually, I think Julia and me has guided you through the income statement and also the balance sheet, right? So we have, so for every entity, you are going to look at the inherent risk and control risk on the whole entity. And also in most of the companies, revenue is so important because revenue is a source of the profit. So if it is the for-profit organization, so the revenue would be the most important area for your audit. So revenue cycle is almost always material. So I do have a question here. Please pay attention to my question. So if you are auditing a charity organization, is revenue still the most important accounts? Hello? You still here?
Yeah. I guess revenue wouldn't be classified as revenue if it's a not-for-profit. It would be like income from donations.
So donation. So instead of revenue, instead of sales revenue, it's more about donations or the grants, right? Would be the key account you want to do the audit. And in addition to that, probably you would put more effort on expenses. Because for your stakeholders, how is a company effective use of money is much, much more important. Is that right? So here, what I mean is for different for most of the companies, we are doing the commercial audit. Yearly revenue is so important, but you should understand actually. So for different types of business, the focus could be different. Okay. All right. So here, coming back to the revenue cycle, I want you to have one example in your mind. It could be your small business, your own family, or a hypothetical or a real company in your mind. Okay, so it could be your small business, could be like a big company, you hold the stocks, could be, if you don't have experience of any business, it could also be, for example, a very, your own family, because your family can be also run as a business. Is that right? Here I want to assume, in relation to assignments, we are auditing a small company. The company is in the healthcare industry. So this company is a PPE, personal protection equipment manufacturer. But the size of this company is not very big. It's very simple, small one. Okay. So usually in the revenue cycle, in terms of revenue, how would you usually get revenue? Via sales, right? So in terms of sales, what type of sales do you usually have? cash sales and credit sales. Cash or credit. I believe you know what's the difference between cash and credit sales. Is it right? What's the difference? So cash, when you offer the goods or the services, you receive the cash directly. But for the credit sales, there is a middle procedure, which is accounts receivable. So when you do the sale, you get accounts receivable account established. When you receive the cash, and then you just decrease accounts receivable and increase cash. Okay. So credit sales, cash sales are important for us. And also in the revenue cycles, in the sales cycles, also there will be a sort of sales adjustments. What are the normal sales adjustments we usually have for businesses? Just recall what you learned from the Fundamental Financial Accounting 1 unit. What are the normal sales adjustments?
Returns.
Returns, sales returns, and?
Yeah.
Only sales returns. Anything else? Do you have, is anyone here actually has done any sales roles? Sales return. So that means, so of course we buy something, sometimes we don't really want, we can return that. What
maybe discounts will apply also. Yeah.
Yeah, discounts is also possible. Okay. Commissions, discounts, etc. Right? So in terms of the accounts relevant to sales, we do have sales, receivable, provision, bad debts. So when you receive the cash, so you could also have cash relevant. If you offer discounts, if the company offer discounts, sales discounts is also relevant. If there are returns account is also relevant. And also, when we are doing sales, it's about delivery of service of goods. Service or goods, right? So if it is about the physical commodities delivered, so inventory account is also relevant. And also, when we're doing sales, yearly cost of sales is also relevant, is right? So those accounts are important for the sales cycle. Okay. So are you familiar with these flow charts for the typical sales? So in these flow charts, actually, there are a few different steps in the sales cycle. And also, as we have come across in the tutorial questions, no matter if it is for sales or for purchases, the main steps are dealt with in different departments or different persons, by different persons. So the first step here is ordering, right? So somebody made the order, so customer made the order, and then that's the starting point of the sales. Okay, so in the ordering step, what is the most important document? Customer order, sales order. Hello?
Customer order.
Customer order here. Okay, the most important document seems to be the customer order. Because today we are talking about the control. Can you tell me what are the necessary controls in this step? Just imagine you are the CEO in this company. You are the internal auditor in this company. Okay. So you are looking at the sales cycle. In the ordering step, what controls are important?
Credit check. And
It seems to be important.
yeah.
Mm-hmm. Okay. So for the customer who made the order, you check their credit limit. So they got approval on their credit limit. So then you're fine. In terms of the operational control, what would you do? The purpose of their order is to purchase something from your company.
I think availability of the goods.
So do you have the available stocks? That's also quite important in this step, right? So you have gone through the credit check. You also have already checked your availability of the goods. So the second step will be shipping, right? So shipping here. So look at these flow charts and also think about the real cycle. Okay, so in the shipping step, what are the key documents? So I think today and also next week will be the only 2 weeks we are talking about the cycle in the very detailed, in very details. Because what I want to do is, so you understand why we have the control, the test controls. Why do we have those tests here?
In the shipping step, the bill of the delivery bill, I guess it's called bill of lading.
Bill of lading, yeah. So the shipping documents.
Yeah.
Mm-hmm. So here, actually we skipped something. So we receive the customer's order, and then the company is going to so recognize the customer's order, and they are going to prepare the shipping order. Based on the shipping order, the shipping company is going to issue you the shipping documents, right? So both of the internal shipping order and also the external bills of lading are important shipping documents for you. Is right? Okay. So sometimes it could be one documents, but most likely they are to be two. One is internal, the other one external documents. So in this step, shipping, what are the key controls? So for example, do you think the shipping department should be the same person as the credit or the ordering department?
No, they should be different.
They should be different. Segregation duty is important.
Yeah.
Yeah. So do you think actually shipping should be authorized or not?
Yeah, shipping should be authorized by the sales personnel, I guess.
So the sales, the customer order should be recognized, and then so once it is being recognized, someone in the shipping department would authorize the shipping. Okay, but how can they do the shipping authorization? So what are the underlying evidence for them to make this decision?
They need to have the customer order.
Mhm,
They also need the credit approval.
mhm.
Um,
So proper order, proper inventory available, and also proper credit approval.
yeah.
So they are going to ship the goods to the customer. So when they are doing the shipping, so the shipping itself could also be quite important, I guess. So what would be the important details in those shipping documents?
The customer address and their name to ensure that it goes to the correct customer.
Mhm. So address, the name, and also the items, maybe also the number of items, the volume. Sometimes they also maybe also have the proposed value, right?
Yeah.
Okay, so once they have complete the shipping, so the next step, invoicing. Okay, so what was the underlying documents for invoicing? So can they just create their own invoices without any underlying documents?
No, they need to take into account all the other work that's been done, the shipping
Mhm.
order,
Mhm.
the bill of lading, customer order,
Mhm.
even the credit. I guess that also comes in under customer order.
So the consistency in the detailed information in different underlying documents are important here. So that should be matched with each other, right? And also, do you think the invoicing department and shipping department could be the same person?
No, there should be segregation of duties between the two.
Okay. And also, so when you are doing the invoicing, what's the best time for you to do the invoicing?
After the goods have been dispatched, or no, when the goods are about to leave the warehouse.
Okay, so when the goods have been shipped or transfer the ownership, why? Why wouldn't you do an earlier invoicing?
There's the risk that the customer order may not be fulfilled,
Mhm.
or it might not be shipped at all.
So if you do the early invoicing, probably they wouldn't be shipped, they wouldn't be performed the sale. So, and also in terms of accounting, actually, recognition of sales is really important because it will be relevant to the potential misstatement of the revenue and also leading to potential misstatement of the profit. Is that right?
Yeah, I guess the standard for revenue recognition would come in when the economic benefits have been transferred.
Okay. So after invoicing, then go to the accounting department. My question here is, do you think accounting department is the same department as invoicing?
No, they should be different.
They could be in one department, but at least the person dealing with accounting or dealing with invoicing should be different. Is that right? So
Yeah.
accounting department, what are the key documents?
I guess all the other documents that have been generated so far, the invoice, the shipping document, the customer order.
Yeah. So, and after that, you should also, in accounting department, the journals and the books are very important, right?
Yes.
Okay. All right. So the next page is about the cash collection. So what are the normal sources currently if the company receives cash? So you receive cash, physical cash. it is possible, right? You could also receive checks, but
Yeah.
most likely you are receiving electronic transfer.
Yes.
Okay. So here in this example, they use the mailing. If still consider mailing the checks, what would be important in this process?
Prepare the receipt once you receive the check, and I'm not sure about the clearing of the check.
So once you receive check, then you should immediately record that, right?
Yeah.
Yeah, and also, so for the check, usually remember when you receive the cash, usually if somebody remit the checks to you, what they usually do. If you are remitting money to another person, what would you usually do? You notify them first. Is that right?
Yeah, you'd give them
You give them notice. So usually the company would receive the notice. Once you receive the notice, what would you do? You could pre-list that and then wait for the actual remittance arrival. Okay.
Okay.
So once it is arrival, and then you would do a daily deposit because you don't really want to keep the checks at your safe box for a long time. You just do a daily deposit to your bank. All right. And by the end of each month, what would you do? You're doing the bank reconciliation to ensure everything you are expected to receive has received and also consistent with your record. Right?
Yes.
So that is about the mailing. What about electronic transfer? It is the same actually, because you just change from the physical mails to the electronic mails. All right?
Yeah.
Okay. So that's the whole process. So in this whole process, multiple functions has been involved, like ordering, credit check, shipping, billing, cash receipts, accounts receivable, and also the general ledgers have been dealt by the financial accountants, right? And also, there are several important documents in this process: shipping transaction documents and also accounting documents. Okay. In those documents, a few of them are very familiar to us, and a few of them are may not be very familiar. But they are actually very, very important. Like a trial balance, they are familiar to us. But in auditing, probably the implication of these documents is far more important than we could imagine. As we discussed in the consultation time, so someone who have done your audit before. So when you're auditing the sales, actually the central documents usually we look around is a trial balance for sales, because it could be further extended as the sales documents, the sales records, extended as the record or the evidence for the provision, and also the evidence for you to generate your confirmation request, etc. Okay. And also in this control, as we always mentioned, segregation duty is very important, right? So in theory, incompatible roles are not doing by the same person. But in the sales cycle, what type of duties are not compatible? So credit check or billing conceptually couldn't be done by the same person. shipping or the ordering, shipping or the billing, invoicing should be done by the same person. Receivable should be done by the receivable clerk, and the general ledger should be done by financial accountants. Cash and receivable should be done by different persons, and also cash should also need to be further reviewed by a senior person compared to the cash clerk. Of course, that here when we mention the segregation duties, we mention maybe a proper company with a reasonable size. If it is a very small company, it's still possible they do not have those kind of segregation duties. Okay. So ordering, credit check, shipping, receivable, cash, and IT should be done by different departments or different individuals. Okay. Any questions so far? All right. I just wanted to record what are the recognition criteria for revenue, because it is very important in auditing the revenue. So for recognizing the revenue, there are a few conditions in accordance with the accounting standards. So there should be the evidence of the sales arrangements. It could be oral, it could be physical, it could be in written form, but this evidence should be there. So delivery has occurred or service has been rendered. That also means before you deliver the actual service or the goods, you couldn't recognize a sale. Otherwise, that's early recognition of sales. The price should be fixed or determined. So you couldn't say, okay, I haven't know the value, but I want to record it. No, you need to have the a proper estimates or the proper fixed value for the sales. Also, when you recognize sales, the fourth point is really important. You should reasonably know you are going to collect that. If in the beginning you think I wouldn't be able to collect that, you couldn't recognize that as a sales. Okay? Those recognition conditions are very important for you, because if the revenue is not meeting those criteria, it shouldn't be recognized as revenue. And if you have a lot of unrecognized revenue, that means the account might be misstated. So what are the typical reasons for the accounts to be misstated? If those conditions are not met, that's early recognition of revenue. And also on this page, we also list a few reasons there are fraudulent reportings in the revenue cycle. Do you understand all of that? Holding the books open past the accounting period, do you know what's that? By the year end, we need to close a book, right? But what about if you don't close a book? So for example, in July the 3rd, we have sales, but we didn't close the book, so we still record the sales into the 2020 year's sales journal. So we hold the book open past the accounting period. Then actually we have overstated the sales for that year. Is that right? So that's one typical reason, typical situation for overstating the sales. What is side agreements? We have sales. We have all the conditions of sales in our written contract. But on the other hand, so as a supplier, you are the customer. So we do have a side agreement. So I say, okay, so in terms of these 1 million sales, actually I can offer you a discount. So the written value is 1 million, but actually I can only receive you 500,000. So that's a side agreement, which is not in the formal contract, but that's the actual condition of these sales. In this situation, what should be the actual value of these sales? It should be 500,000. But the recognized one in the documents, in the accounts, would be 1 million. So that's a very, very typical fictitious sales or fraudulent sales, right? Do you know what is channel stuffing? Hello? If you click on the link in the slides, you could find what is channel stuffing. Channel stuffing. So for example, let's say, okay, for my PPE manufacturer, now the demand is not that huge, but I still need the big sales number. So for all the retailers, I tell them, okay, so let's have a monthly contract, still $1 million. But actually I know you can only sell maybe $1 per month. But I still want to provide you $1 million, no matter if you could sell that or not. So by inflating the sales number in the contract, I inflated my sales, but the actual sales wouldn't be that big. So all the balance amount will be finally reflected as sales return or something like that. So that's another form of fraudulent sales. Okay. So here actually in this page, there are a lot of different types of fraudulent sales in relation to the revenue cycle. So as an auditor, you should be aware of those typical methods of fraudulent sales. So your role in the audit is to ensure there's no material misstatements based on those types of potential fraudulent sales. Okay. So, okay. So if we are able to understanding the sales cycle, understanding the key controls, understanding the business in terms of the problems, in terms of their sales pattern, we would be able to understand, assess the inherent risk. Remember in the beginning, I just want to imagine my company is a PPE manufacturer, right? So currently we are still in the COVID-19 period. So consider the nature of the firm and also consider the nature of the environment. So let's say, okay, maybe in July, Australian, the whole market is quite stable, is quite safe. So we wouldn't expect a lot of increase in the sales for this PPE manufacturer, right? But now, in these months, probably we could see a lot of a jump in the sales. So let's consider our current situation. We are still in the auditor for this PPE manufacturer. What would be your consideration in terms of its inherent risk? Still following or not?
I think one of the risks would be whether or not the company would be profitable in the long term. Going concern.
Sustainability of the profit, right? Chris, yeah, they could make big profit in the short run, but is this kind of demand continuing for long term? That's a big risk. What else would you also consider? I think you can actually include those factors into your own analysis to your assignments. So if we are auditing the PPE manufacturer, do you worry about the regulations and also the quality standards? Do you worry about the policy changes?
Yes.
Do you worry also, probably the PPE is not a big deal, but if you are also manufacturer of other healthcare equipments, do you also worry about the potential legal liabilities, especially in this stressful period?
Yeah, I guess maybe your PPE might turn out to be defective sometimes.
Mm-hmm.
So they need to check quality checking. They might be liable to cases if it's not up to standard.
So here, actually, we are talking about understanding the business and also evaluate the business risk. And you can relate that also probably to the accounts and also to some assertions as well. Is that right?
Yeah.
So, and also in terms of inherent risk, are you also considering the complexity of the revenue recognition? So for sales account, usually it wouldn't be very complex, but sometimes some sales could be very complex. I'm not sure if you can still record the construction contracts. Is this complex? So the recognition of the revenues in the contracts, in the construction contracts, it will be staged and based on different recognition criteria. Is that right? And for some of the expenditures, they could be capitalized. For some of them, they couldn't be. So the long-term construction contracts has been giving different standards, separate standards, because it seems to be very complex, right? So most of the sales are not very complex, but they are complex sales, right? So, and also in the sales, what type of sales would also be very complex? What type of sales related accounts could also be very complex? If there's something relevant to the sales discounts, sales return, and also provisions, this kind of transactions or this kind of accounting judgment will be very complex as well. So that's also the things you want to consider in the inherent tax assessment. And also the other factor you also want to say is the results from the last year's audit. We roll over the audit working paper each year, right? If last year in this company, your assessed inheritance was very high, this year, it tends to be still very high because usually the fundamental transactions, fundamental business wouldn't change. The fundamental control wouldn't change as well, right? Usually, I mean.
Yeah.
Okay, so after you considering the inherent risk assessment, you go to the control risk assessment. Remember, we just went through the key control documents, key control process, and also the key control points in different steps. So that was actually for us to understand the revenue process. So based on that assessment, understanding, you are going to evaluate the control risk. Are they high or low? Are they acceptable or very high? So if based on your own understanding, if you think the control risk in the sales is not very high, you're going to do the test controls. If you think it's very high, you don't want to rely, you wouldn't do that. Okay. So when you are understanding the control, when you are doing the test control assessment, often we rely on the internal control model. As we have analyzed, so overall business environment is also relevant to the control environment. So how good the overall control environment would be in relation to the revenue. We also consider the company's own risk assessment process. If they do have a good risk assessment process, this could also reduce the control risk and also increase our audit confidence. And then to the detailed control activities, also linking to what we just analyzed in terms of different flow charts. So in the flow charts, we mentioned there are a lot of key controls and key control activities, right? So are they there in terms of existence? Are they efficient in terms of the effectiveness? Are they continuous in terms of continuity? Okay. And currently in the modern industry, so almost all the documents should be in the system. So the IT design and also IT security would be also quite important. Finally, in terms of monitoring, here we want to focus, we want to emphasize the reconciling items, the outstanding procedures, and also the follow-up procedures. So if you know there are some problems, if the company, if the internal control department knows some problems, do they also have a proper monitoring and also correction procedure? Is important. So that's also what the auditor need to follow to see if the company has a good closed loop of the control. Okay. So I think that's what we really want to mention for today's test controls for the controls in the sales process. But we haven't really touched anything about the detailed test controls. So here we just want to refer to some examples of test details, the details of test controls. So I think this page will be very, very helpful for you because this links to the potential misstatements, to the assertions. And when you design the test controls, actually, you need to address those important assertions at risk. So here, we just list all the important assertions in relation to the sales cycle and also the cash collection cycle, cash collection transactions. Okay. So I don't really want to address each of that. I just want to take some examples. So on this page, looking at the test controls for revenue and also looking at one specific assertion, accuracy. So what is accuracy assertion in relation to controls of the revenue? In terms of the controls of revenue for accuracy, that means, so all the shipped goods, all the invoices has been recorded, correct into details, accurate in all the details in terms of amount, in terms of the overall value, in terms of the summarization, in terms of the transaction details, right? So if we focus on the accuracy assertion for the test controls in sales, remember what is the next step? We want to look at the proper key controls for accuracy. Is that right? So what are the key controls for accuracy? So in the key controls, you will have the calculation accuracy. So for example, if you have a set of sales invoices, so you want the sales invoices, the summary of the sales invoices should be correctly calculated, right? So the monthly sales should be matched with the summary, the sum up of each of the individual sales invoices. And the annual sales should be matched up with the individual monthly sales. So calculation is important. And also the details of the transactions are important. So the matching of the detailed conditions from the invoices to these other underlying supporting documents should also be checked, should also be controlled. And if there's any discrepancies, so the company should have a correction and monitoring process. So the control in terms of follow-up procedures are also important. Important controls. And also more importantly, because when we talk about the accuracy for the sales, we also consider the proper provision for doubtful debts. So written off of the bad debts will be important, but for the written off for possible doubtful debts, so the proper authorization, proper approval, proper calculation would also be the important control points. Okay, so in relation to this assertion, if we are able to identify the key control points, then, as we mentioned before, we should be able to design the proper test of controls. For example, if the control points is the calculation, the sum up calculation, when you do the test controls, you just need to have the accounts and do the sum up, do the recalculation again. If your key control points is about the matching of the details, what you want to do is get a sample and then to check each of the detailed key points are matched with each other. If your key control points is to see if there is a follow-up procedure, so what you need to test is the evidence of this kind of follow-up procedure. If your key control here is the approval for written off, then in your test controls, your test, it will be focused on the evidence of those approval by an authorized person. Okay. I'm not sure if you're still there or not. So by going through this example, what I want to mention is, so for different area of test controls in the revenue cycle, so you need to identify what are the assertions you want to focus. For each assertion, there will be typical control points. And then for each of the typical control points, you would be able to design the proper test controls. Okay. So I just leave those tables for you to just to revise up the class. So the same examples would also come for the cash collection. Cash receipts. And don't forget, actually, so for sales, the abnormal sales accounts like sales return, sales allowances, sales discounts would sometimes could also be important. But in the auditing practice, So we also look at materiality. So if in this company, by nature, if the return, if the discounts by nature is not big enough, then auditors sometimes could skip this area if they think this area is immaterial. Okay, so here actually today we are talking about the test of sales in relation to the test of control in relation to the sales cycle. So next week, we are going to talk about the substantive audit procedures, still about the revenue process, still about the sales. That will be in lecture 8. And also for objective 5, that's the testing controls in the computer assisted auditing techniques. So this is for your own ratings only. So finally, for today's class, I just want to get your attention to one thing which I didn't mention, but I think is very important. I hope you are still here. Let me know you are still here. Okay. So today we are talking about test of sales. And next week we're talking about substantive tests. But actually we know, for a test of sales or the substantive test, actually sometimes we can do the test at the same time. For example, we get a sample of sales invoices and then matching with those underlying transaction documents. This could serve for both the purpose of testing control or testing the detailed substantive tests. Do you agree? So for transaction test, they could be the dual purpose test. If you're great, let me know.
Yeah.
Okay, but because the focus of those two types of tests could be different. So here, what we want to do in the test is we get 100 sales invoices in accordance with the sales book. We match these 100 sales invoices to those underlying transaction documents like sales order, shipping documents. Okay. So in condition A, so in this, the total value of those sales would be, let's say, $10,000. So I can just type it in for you. Just create another page. Just give me, okay. So a set of sales invoices. So that's 100 invoices. Total value, $10,000. So we have, what we did is matching those sales invoices, the details to the order, to the shipping documents. Okay. So result 1. So I think, okay. In result 1, so we got 5 invoices missing the original sales order. In result 2, so we have So for those 5 invoices, the total value missing the sales orders, let's say that's $500. Checking documents. So because today we are talking about the test of control. So in the companies, in the audit criteria, if there are 3%, exceeding the 3%, and that means the control is not in place. The control is not effective. That was the criteria. No, I think So based on these results, that's 5 invoices missing. So 5 shipping documents missing in relation to $200. So can you make a judgment? Is the control effective or not?
I guess on result 1, 5 invoices missing. The control is not effective because it's greater than 3%. It's at 5%.
Mm-hmm.
And result 2, the control is effective because it's less than 3%. It's at 2%.
I'm not saying results 2, results 1. I just say results.
Oh, okay.
They are based on the same thing.
Right.
In relation to $200.
Okay. Okay.
Yeah. So what is your judgment?
It's tricky, but I guess we'd look at the dollar amount.
Mm-hmm.
And it's less than 3%. So we could say that the controls are effective.
So what do we mean by control? So when we look at the control, when we evaluate the test control results, are we based on the number of items or based on the dollar value? That's the question, actually.
Yeah.
So if you are using the dollar value, it's still within the 3%. If you are using the 5 items, it's exceeding 3%. Which one you should use? Okay, so because here the number of items is actually about the deviation of control. But if you are using the dollar value, that's about misstatement. Is that right? But
yeah,
you are evaluating the control effectiveness. The focus is deviation of control. So you should focus on the number of items. So you should use the 5 missing documents in relation to the 5 invoices, which has exceeded 3% of deviation. So the control is not effective. Okay.
Yeah.
All right. So that's what I want to emphasize at the end of the class. And so thank you very much. And you do have your tutorial questions somewhere in the here. Yes. And see you next week in the lecture. And next week in the lecture, we are going to do the presentation. In the lecture, we are talking about substantive test. And also in the tutorial, you are going to do some presentations. So I probably want to alter a bit about the order of the lecture and tutorials to make those two tutorials combined together. But I will send you an email to get a response. Okay. So thank you very much for the extended lecture, and see you next week.
Thank you.
Thank you.